markets were clearly in for a bit of a surprise on Tuesday when the Reserve Bank of India decided to raise the key policy rate by half a percentage point against the general consensus that it would raise that rate by only a quarter percentage point. Why did the Reserve Bank of India believe that it needed to take such an aggressive stance? Clearly, inflation is on top of the mind of the Reserve Bank of India, and the central bank has come out to say that it will focus on battling inflation even if it means compromising on growth in the near term. We are in conversation with Dr. Subbarao, Governor of the Reserve Bank of India. Governor, firstly, thanks very much for taking time out to talk to us. Now, to begin with, if you could just take us to the thinking within the RBI when you decided to raise rates by half a percentage point and not a quarter percentage as the market was largely expecting.
Thank you very much. First of all, I want to say it's a pleasure being on ET now. And coming to your specific question about the shift from the baby step of 25 basis points to 50 basis points, it was driven by the changing growth inflation dynamics. Last year, if you would allow me to give a slightly detailed answer, domestic growth was still getting a foothold. There was uncertainty about the monsoon. Domestic inflation scenario, it is coming largely from the food side and other supply pressures. So the intent of monetary policy last year was to anchor inflation expectations and to support growth. This time round, domestic growth has taken a foothold. Globally, there is an equal amount of uncertainty, but for a different set of reasons. And most importantly, on the inflation front, the drivers have decisively shifted from food to fuel and non-food manufacturing. There is demand pressures now. So we believe that we needed to take more aggressive action to combat inflation. And that explains the shift from 25 basis points to 50.
Sure. So should one really read into this as the RBI taking a more aggressive stance on fighting inflation than it did in previous quarters?
In a manner of speaking, but if by implication you are saying that we did not act adequately last time, I think that would be incorrect. Okay? More aggressive in the sense that the size of the step is longer. But as I just explained, last year's monetary policy stance and monetary policy actions were driven by last year's growth inflation dynamics. Indeed, as the year progressed, the growth inflation dynamics had changed and our policy had kept pace with that. This year, a chronological change in year or fiscal year doesn't make much to real world. But in as much as we talked about that, in April 2011, the drivers of inflation have changed, growth dynamics have changed, and we believe that we must bring inflation down even if it costs some growth.
Sure. Now, to the extent that liquidity is once again very comfortable within the system and it is well below your, the target that you set of -1 NDTL, was hiking the CRR an option you ever considered?
Certainly, all the policy instruments that we have at our command are in our toolkit are considered, and CRR was an option we considered, and we did not pursue that. As much as liquidity has substantially improved in the last few weeks, going forward, we need to factor in the management of government cash balances. So we thought that CRR is not an appropriate instrument now.
Now, a number of foreign investors we speak to, Governor, tell us that they are coming to terms with 6% being the new normal for inflation in India when they consider investing into this market. Is that a fair assumption to make, that 6% is the bottom that we should assume and that it's not going to go anywhere below 6% going forward?
I don't think that'll be a fair assumption, because we said in our policy that we want to bring inflation down in the medium term to a scenario of 4 to 4.5%, and beyond that to bring inflation to 3% consistent with the international levels. So to assume that 6% is the new normal, it would be incorrect. This 6% higher inflation, we tolerate a higher level of inflation for a higher level of growth. All this debate, I think, is somewhat inappropriate in our current context, because when inflation rules as high as this, it is inimical to growth, and we need to bring it down in order to sustain high levels of medium growth with price stability. It should be possible to bring inflation down below 6% when supply response kicks in, when potential output of the economy goes up, when investment takes place to contribute to that. I don't think we should act as if 6% is the new floor.
We'll take a very quick break, but do come back. We are in conversation with the Governor of the Reserve Bank of India to understand a little better as to why the RBI has done what it's done in terms of raising rates far more than what the market was expecting.
I believe that inflation is going to come down on the way forward. On the growth issue, we said very clearly that we may have to sacrifice some growth in the short term, but I don't think our actions are going to kill growth as they say. In fact, I believe that they're going to support growth in the medium term. There are a number of variables which affect the crude oil price apart from liquidity as a result of accommodative monetary stance of advanced economies. There is, for example, demand pressures coming from emerging economies. There is the political factors in the Middle East and North Africa which have impact on the supply side. There is the Japan factor that Japan might indent on more oil to compensate for the temporary reduction in nuclear energy.